Welcome to the Passive Income Podcast. I'm your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. So super excited for this episode. Coming back for another appearance is Anthony, a newcomer investor. Thank you so much, Anthony, for coming on and spending some time with me. For those of you who don't know Anthony, just maybe go ahead and give a brief introduction, and then we'll get right into our what I know is going to be another amazing conversation.
Dave, you're too kind. Thank you for having me on the show. And so to introduce myself, my name's Anthony. I go by newcomer investor. I'm a 26-year-old investor based in Toronto. And I also have my own show, and I've been happy to be a guest on Dave's show, and excited to talk again today. And I love dividends, and I love also some non-dividend stocks, but mostly dividends. And I'm sure we'll talk about all of these in a second. So yeah.
Yeah, definitely. And yes, I have been a guest on Anthony's show as well.
You were our
And,
first guest ever on my show.
right, at
Yeah.
which you referred to me as a legend, and I was like, I'm not sure how to take that.
Living legend.
Living legend. I'm like, okay. I'm definitely not a legend.
You are. For putting the whole community, bringing us all together. You know, what you've done, I don't know anyone else who's done it at that scale in the community. And no offense to everyone else, because everyone's awesome here, but like you've
Exactly. Yeah.
interviewed so many of us. And I met so many people just through you by watching your show and then just following them and saying, hey, that episode was great and stuff. So yeah, you are a legend, man.
Oh, thank you. Thank you. I appreciate the kind words. And to set the record straight, I have not interviewed a single person. Every person on the Passive Income Podcast has simply been a conversation like we're going to have here, just a conversation between two people about investing, about, like you said, dividends, about growth stocks, about other things. And yeah, let's just get into it and see where the conversation takes us. Right off the hop, since I know we all know, we all know that you are the biggest cheerleader of Brookfield.
Yeah.
And since the last time we chatted, I know there's been a lot of things that have happened with Brookfield.
Mm-hmm.
So let's just maybe start there and see and get your thoughts on everything that's happened, because I think it's been about what
Yeah.
I want to say 9 months since the last time you were
That
on,
Yes, that's correct. A
give or
lot
take.
has changed. It was before the end of 2022. So, I mean, the first major change with Brookfield is, of course, they completed the separation. So when I was talking to you, they had announced they would do it, but now it's official. So we've got Brookfield Corporation and Brookfield Asset Management. We also had a bit of a period where, the first half of this year, the market didn't like it very much. You know what I mean? The stock was under pressure. That was actually when I was buying the most of it. So I was still very bullish. I was like, this is great. I'm just
Yeah.
gonna keep buying this company. But in the more recent couple of weeks or so, I think people now are certainly more interested. I'm seeing more and more attention even online. Like when I started posting about it last year, people didn't care that much, but now I'm seeing tons of people really interested in this company. And yeah,
Yeah,
I
there's a
mean,
lot more momentum on X, the app formerly known as
yes.
Twitter, right?
Absolutely. And if you look at their investor day, which they did on September 14th, I think. I mean, that was Dave, if you haven't watched it, you should, because you cannot watch this and not feel like it's the best company in Canada. And I'm not even saying that because I love them, but seriously, they are in a position of strength that they've never had before. The growth that they've had over the last 5 years. And by the way, so I've owned them since 2019, so I've been able to watch now the growth, right? Free cash flow has pretty much doubled, and it's gonna double again in the next five, like by 2028, and that's per share, right? If
Wow.
you look at the valuation, also per share, and now we're gonna talk in US dollars, right? For 2022, the distributable earnings, which is what they use for free cash flow, was around $3.20, something like that, if I'm not mistaken. And in terms of the stock price in US dollars, it's at around 32 to $33. So it trades at a like 10 to 11 multiple, which is so cheap for such a strong business. No, seriously, it's crazy, right? It's like, because I mean, there are some other stocks that are really good, like big tech. They trade in almost the 30s, right? Or 20
Right.
high 20s. So when I see a stock like this that is so dominant, that is capturing an increasing amount of market share from that whole industry, and that is doing so well yet is priced so low, to me, it is a strong buy. So anyway, that's why I've been buying. And again, by the way, I should say, not financial advice. This is just me, but I'm not telling anyone what to do. But this is why I have been buying a lot, especially early this year. And that's why now it's my top holding. It's about 14-ish%. And to be specific, that is Brookfield Corporation. So that's the top holding company. It's the top
That's
of the pyramid.
just ticker symbol
BN.
BN,
Exactly. Yeah. I also own BAM because so when the
which is
split.
Brookfield Asset Management, BAM.
Exactly, yes. So when the split happened, people who held so the ticker before was BAM, also it was actually BAM.A, and then it became BN and BAM. So when the split happened, you people owned both shares, like both tickers. And I have added since then a lot to BN, but I haven't added a single BAM. So I love BAM, but I prefer BN because you kind of get everything. And another part that I should mention as well, actually, is when you have BN, and they said that themselves in the investor day, right? You're really right in the middle of the entire value creation matrix, right? When you have BAM, you get the asset manager. So that means, I mean, what is the asset manager really? It's a free cash flow and a high dividend kind of stock, right? The yield now isn't that high. It's probably like 3 point something percent, but they're projecting
That's
to
still
grow it.
pretty good, right?
Yeah, it's not bad. They're projecting to grow it 15 to 20% for the next 5 years, which I find really ambitious. But hey, if they think they can do it, that's great. BN is different. That one is really about they hold most of the cash and then they reinvest it into their children. So that's Brookfield Renewable, Brookfield Infrastructure, Brookfield Asset Management, and Brookfield Business Partners. And they kind of do
Just
whatever they
quickly,
want.
sorry, just quickly to define, are those all also individual ticker
Yes.
symbols?
Yes. So I also own Brookfield Renewable. I used to own the infrastructure, but I sold it and I put it into BN actually. And then there's also Brookfield Business Partners. And now there's also Brookfield Reinsurance. And so this is the one that I find so cool also that you have access to, right, if you own BN, because BN owns the insurance business. So you get access to that. And of course, you also own the real estate. Another thing I should mention, because that was a big point of discussion in the first half of this year, real estate. People got a little scared, right? And I mean, we see the pressure on REITs, and we'll talk about REITs after, right?
Yep.
It's been really bad. So we've seen a lot of articles on, Brookfield. Oh, like they had this downtown LA office REITs that they owned that basically collapsed. So that actually happened, right? So people said, "Oh, Brookfield's gonna fall apart and stuff." But here is the thing that I think sometimes flies over our heads, right? Is that Brookfield is very, very, very large. When I started investing in it, their assets under management was less than 500 billion. Now it's 850 billion, I think, right? So if let's say just 1% of their assets under management kind of fall apart, that's like $8 billion, which is more than market cap of a lot of Canadian companies, right?
Right. Yeah.
So
Yeah.
that's why sometimes you'll see in the the news like, oh, this LA office is like not doing well, but and then people say, oh, Brookfield's gonna fall apart, but that's like 0.1% of their assets under management. So I don't want to say we don't care, but it's like, don't let the news kind of affect too much how you feel about the company, because it's possible that the company is just so big that of course a percentage will fall apart, but that's fine,
Right.
basically.
Yeah. No. Great. Just quick shout out here to uh, buyinvestingshirts.com, where you can find t-shirts, hoodies, all caps, toques, coffee mugs, and yeah, definitely check out buyinvestingshirts.com. Use code word Posse, 5% discount. Link in the description. Let's keep going with Brookfield because it's the CEO,
Bruce Flat.
Bruce.
Yeah, he's a legend, just like you.
Bruce, sorry, what is his
Bruce
last name?
Flat.
Flat,
Flat. Yes.
Flatt, I believe.
Yeah, correct.
And I know you've, well, I still want to say tweeted. I know you've posted about him individually quite a bit, and he seems
Yes.
like an incredible leader for this incredible
He's
company.
insane. Absolutely. I mean, I read not even too long ago, actually, an article in the New York Times about him, and that was dating from 2010, right? And that article actually they asked questions about him from a lot of people who knew him when he was very young. This guy took over Brookfield. If I recall, it was Brookfield Properties first. So he was a real estate guy originally, right? And he was an
Right.
accountant. He trained as an accountant. He graduated. He was second best in the province. He's from Manitoba, second best in accounting. Then he became CEO of Brookfield Properties. He was already, and he was 28. So that's 2 years more than me. To 28, 29, he was working there. And he was doing these huge deals, buying great property in New York and stuff. He was there during like you have to remember also to kind of understand how these people think. 9/11 happened. Now I was very, very young. I don't remember that, but I know a lot of people when that happened, it felt like the end of the world, right?
Yeah,
And Bruce Flatt was one of the people who said, well, firstly, this is a tragedy, but also let's not just sell out of everything because this happened, right? He was one of the people who said there is a future in New York after this.
yeah, of
They had
course, right?
property
The
in New
city of
York.
New York is not, as you said, it was a horrible tragedy, horrible day in history. But the city of New York is not going anywhere. Here we are, 20 some years
Exactly.
later. The city of New York is still there, thriving, incredible city, right?
Exactly. So one of the characteristics really that we see about him is he's very methodical. He's very long-term thinking. He's not thinking about like what's the market going to look like in 6 months or even in a year or two. He's looking at what's it going to be like? What are the big trends for the next 10, 20 years, right? And so they've been very methodical about building this business over time. I love it's such a great joy for me to go back into their archives and read his investor letters from like 2005, 2006, 2008 and seeing how they think about it. There was actually one I remember. I think it was 2008 and then 2009. So when the great financial crisis happened, right?
Right.
2008, when the Brookfield stock fell like 70%, and he literally said in the letter, he said, obviously, we're very disappointed, and we know that you shareholders are disappointed too, but we urge you to not be too panicked about this. We believe that our stock is worth a lot more than whatever's happening. And then the next year, when actually the stock went up like 200%, he said the same thing, but in the reverse. He said, don't get too excited by the markets. We also don't think necessarily that the business, is 200% times better now than it was a year ago. Don't get too excited and don't expect the stock to do these crazy movements all the time. To
Yeah,
me,
that's
that
the
is a show of very mature leadership and a very like respect for shareholders. Another part of their respect is that they haven't exploded the share count, right? So they don't do a lot of share dilution. Occasionally they'll do a little bit, but it's not that much. And they also do buybacks to kind of bring it back to the norm.
right.
So yeah, he's a great leader, really smart guy, and humble as well, which I appreciate, and predictable too. That's kind of a different topic, but to just quickly jump on a stock like Tesla, for example, I have a lot of respect for Tesla as a business and for Elon Musk. He's a visionary, but I don't like CEOs that are so unpredictable that he can just tweet some random
You never
stuff.
know what he might tweet, right?
Exactly. That to me, because that's like an extra variable that you have to keep in mind. It's not only is Tesla a good business, but it's also what's on Elon's minds today. Is he gonna try to buy another Twitter company and do some random stuff that's unrelated? You know what I mean? And
Yeah,
Bruce Flatt is very focused. He has one goal, that is for Brookfield to be the best, alternatives asset manager in the world and to keep growing their assets under management and their free cash flow per share. And that's it. All this other stuff they're not focused on. They just focus on the essentials.
nice. I heard a couple of things there. So, one, going back to Bruce Flatt saying like ups and downs, and it really sounds like what we talk about a lot or try to talk about a lot is just the controlling your emotions, right? There's going to be lows, there's
Mhm.
going to be highs, and don't get too low or too high on either of them. Just control your emotions and let the market play out because whether it's super low or super high, whether the market valuation is correct or not, we're kind of all in this together. The other thing that
Exactly.
I kind of want to touch on, you said Brookfield Properties, and I honestly I don't even know this. Did Brookfield start out as a REIT? Is that how it? Is that how it?
No, so basically what happened, the history here is complicated, and I may myself get mixed up, okay? In the 1800s, late 1800s, they had this company.
We're going back that far.
Yes, it was called the Brazil Light Electric Company something. It was basically a utility in Brazil. That's how most people see the very beginning of Brookfield, at least. Then eventually it became
Okay, I did not see that one coming.
yeah, no, it's crazy. Then eventually it became Brascan, and then for Brazil, Canada. And then what happened? There was this group. I think they're called Bronfman or Etper Investments, something like that. It was this like very wealthy family in Canada. They had another business, but they purchased Brascan as well. And then all of a sudden you had like 3 or 4 main businesses, and all of them owned like tons of businesses in all kinds of unrelated industries. And it was really, really messy, to be honest. And then they
Right.
had this guy called Jack Cockwell, who was then hired to be the CEO for that. I think it was in the 80s or 90s, something like that. And he took a young Bruce Flatt under his wing, and actually they went through a period of a lot of distress and trouble because they had way too much debt. And it was just, it was actually kind of a disaster, and it kind of fell apart, to be honest. So the original owners had a chance there to leave, so they sold most of the part of their assets and they ran away. And then some of that leadership, including Bruce Flatt, they kind of got promoted and they kind of took over the ruins and rebuilt it. And that's when Bruce Flatt laid out that vision in the early 2000s where he said, okay, we're going to sell off some of those assets that are too difficult. Like they were in mining, for example. Mining
Yeah.
is horrible. It's really, really difficult to be good because you have periods of 20 years where you make no money and then periods of 20 years where you make tons of money, right? So they
Yeah.
said, let's get rid of the less predictable stuff, but let's keep the parts that we like. Like, for example, around their mining operations, they had a lot of hydro power plants, and that was the beginning of Brookfield Renewable, for example, right? So they did that, and they basically consolidated around financial services, which became the asset manager, and then the renewable and the properties. And then afterwards, they expanded with the infrastructure, and then they added all the other stuff that they have. But yeah, so Brookfield actually originally, it used to be very big, and then it fell apart. But now it's being built up again, but in a more disciplined way, let's say.
Awesome, awesome. That's a great recap on Brookfield and everything that's been going on within um, BN and BAM.
BAM, yeah.
Yeah, sorry. Um, Kind of want to switch gears to another one of what I know is your favorite topics. You know that right outside that window, just on the other side of the road, there is a triple track CN rail. I'm hoping to have you back next summer. I'm going to do one of these from outside where I can just sit because unfortunately, right now, if I open those curtains, it's just too much glare. You can't see through the
Oh,
window.
yes.
But yeah, I'd love to have you back next summer when I can sit outside and just we can count the trains going by.
Oh, sure thing. Yeah, I'd love to visit. Yeah, for sure. Yeah, we can do that. But so the trains on C, I mean, as we all know, right? CN, it's one of our top whole, and you like it too. But do you own it still, or you still don't own it?
I still don't own it, and
Ah,
it's
man,
simply I
come on.
both both Brookfield and CN and CP, I would love to own them, but it's exactly that sort of thing where you can't own everything, and I'm
Yes,
keeping my entire portfolio to that 25-ish number, and
that's
I'm
fair.
like, "Okay, I'm probably gonna buy a couple more Canadian banks, I'm gonna creep up to 30." And I really do not want to go over 30. And I know these companies that you're talking about are incredible companies, and
Yes.
sure I would love to own them, but you can't have everything.
Yeah, no, and that's fair enough. It's good to have not too many holdings so that you can kind of really control and know each company that you own. But I mean, a quick note on CN. I mean, it's actually, since we last spoke, I think it was my fifth largest holding. It's now officially my third. So my confidence in them has grown. I have been buying more, especially right now. I kind of like it because it's under pressure, to be honest. If you look at the earnings, they have not been as good as we'd all hoped last couple
Right.
of quarters, right? And it's, it's a sign of, again, the ongoing slowing down economy, right? There are less goods being moved simply because high interest rates and there's less economic activity. So, but to me, that is a good time to actually be buying because I know, of course, it's going to rebound. And even like I said, if it's slowing down as a business, it's still very profitable and they're still increasing dividends and doing buybacks and all of that. So it's
Right.
earnings are under pressure, but they're still very good. And the payout ratio is still 40% or maybe a little above 40. So it's still extremely
You didn't
strong.
hear that, but I think that was a via rail train. One just went by
Oh,
right now.
no, I didn't hear it. But yeah, no, so CN, I like it right now. I know you had AJ Button as a guest not too long ago. I
Yep.
love him. He's awesome. He mentioned to me, I think, that he would buy CN if it traded at a PE below 15. I don't know if it's gonna get to 15, but if it does, I would put like some extra savings into it because that would be crazy. Right now it trades right under 20. And I mean, to me, under 20 for a quality stock wide moat like this, I'm buying, adding a little bit here and there
Yeah, yeah.
because it's good stock. It's gonna be there in 30 years, you know?
And I think you also know because I only did it once, but I put out a short video on I think it was still called Twitter way back then. From about 2 kilometers down the road,
Yes.
there is also a CP rail line that
Yes.
goes
I remember.
that's a single track. So I've got a single CP rail, and then right across the road is the triple CN rail. So I guess just thoughts on CP rail as well, and maybe the comparison. I haven't heard your thoughts about what's happened since too with CP. Now it's CPKC.
CPKC. Yes. So I don't own CP anymore. I actually sold it because it was a tiny position and I had like it was trading at also kind of crazy valuation. So I thought let's take that as an opportunity to consolidate the portfolio. But
So you
it
took
is
profit and said, "Thank
yes,
you very much. I'm gonna
pretty
allocate
much.
this these funds elsewhere."
Yeah, but it's a super high quality company. I mean, it in the last 5 years, it's outperformed CN by not even a little bit, but by a lot in terms of
Right.
capital gain. The dividend is smaller though, so if you're a more dividend oriented investor, it's like not as nice, but capital gain, I mean, can't go wrong with that, right? It's doing incredibly well. It also trades at a valuation historically it's been higher than CN. I think right now it's maybe like 22 or 23 PE, so it's come down because it was like almost 30 like a few months ago, but it's still kind of expensive. But yeah, the acquisition for them, it's transformational. It's huge because now I think they're the only rail company that has Canada, Mexico, US, all of them, right?
The only one in North America, well, obviously no, in North America that has all
Yeah,
three major countries being Canada, U.S., Mexico.
exactly.
And
So
honestly, I
super
don't.
high
They might
quality
even
stock.
extend further south than Mexico now that they've taken over. Who knows, right?
Maybe, yeah. So I mean, I love CP. Their CEO Keith Creel, he's a super super smart, incredible guy. There's a really good interview of him on Spotify, like a podcast, and he talks for like 2 hours about the business, the history of CP, and just his job, how he kind of views things. So yeah, he's a great leader as well. I like the CP team. I think they're a lot more consistent than CN has been in the last 3 or 4 years. Like just in terms of leadership, they haven't been changing CEOs and stuff like that.
Right.
So I have a lot of respect for CP, and I think it's a great investment. It's just not a fit for my portfolio right now, but I would for sure maybe come back in if it falls down a little bit in
Yeah,
price.
yeah. No, it sounds like you did the smart thing. Hey, it's like it was a small position. I have an opportunity to take some profit. It's I love that old saying. It's never a bad time to take profit.
Yes, I completely agree. But yeah, it's a really, really excellent stock. And also wide moat, you know what I mean? It's not going anywhere for the next
Well,
decades.
obviously both CP and CN.
Yep.
I call them the widest moats of any companies in Canada because
Yes.
nobody's coming out tomorrow and building another railroad track in between
Never.
CN and CP right here behind me, right? So
Yeah, and another quick thing I guess I'll mention too that I like about Rail is it's really the way to that I look at it at least it's an ETF for economic activity like industrial stuff in Canada,
that's a
right?
great way to look at it. And I'm going
Mm-hmm.
to add to your point because I already know kind of what you're going to say. Because
Mm-hmm.
again, being outside, I drive to work. I drive down the road right beside the railroad all day, every day, and I drive back and I see the containers. So I
Yep.
see the containers that say Canadian Tire or tons of different companies that say right on the container, right? So
Literally. Yep.
exactly to the point you were about to make. So I'll let you finish your point, but I wanted to jump in there and say
No,
that
thank you for that. And again, you have firsthand knowledge because you've seen it. But if you
every
look
day
at
I see
their
it.
yeah, if you look at their investor relations page and they have like an investor handbook and they have a really nice thing where they break down like a pie chart of the types of goods that they transport. And a lot of people don't even know they transport oil, so you get
Yeah.
exposure to the oil and gas industry. They transport
Lumber, man, you would not believe the
lumber.
amount of lumber that goes by my house every day.
Exactly right. So forest products, they transport if for people who like Nutrien, for example, which is one of the largest potash producers in the world, not just Canada, they transport
Yep.
almost all of their potash products, right? So there's that, and then intermodal services. So there's tons of stuff. If you
Yep.
just want, industrial activity in Canada, you could just buy CN or CP, and that you could just buy that, and that's it. That's enough.
I love the way you tied that in and called it like an ETF within itself because
Yep.
it really is like when you see it, and like I said, I see it every day. You see these containers go by or rail cars, and I see it all the time. Canadian Tire, lumber, like you said, oil
Hmm.
and gas. I see so many of so many different products, or
Coal,
it's
even.
kind of endless, and it's
Yep.
just so you're not wrong.
Yeah, it's beautiful. So yeah, I really like the trains. Can't complain having them in my portfolio. Like CN, it's one of the oldest stocks that I've held. So since my first year, 2019, I've held it uninterrupted. I've never even sold a share. I've only added, and I plan
Nice.
to keep doing that. Yeah.
That's amazing. That's amazing. And I know you just uh beyond investing, I know you just kind of love the trains too because
Yeah.
I tend to put out 30-second videos every so often on X, and you seem to love them.
They make my day. They make my day, Dave.
Nice. Okay, now let's get into the next topic. I know you call yourself newcomer investor, but you've really been in Canada for quite a while now. I
Yeah, it's
think
been 10 years now.
10
Yeah.
years. But I do know that, like so many other Canadians, as you take a sip on, hopefully that's coffee because yeah,
That's actually tea for once.
I'm bringing up Tim Hortons next,
Oh,
and not
yes.
just Tim Hortons, but obviously uh, RBI, QSR, Restaurant Brands International. So Tim Hortons, Burger King, and
Popeyes and Firehouse Subs.
Popeyes and Firehouse Subs are within that portfolio. So, and I know you're a huge fan. Um, I'm a
Well,
huge fan of obviously Tim Hortons and Burger King as well. And same thing, going back to I don't own it, and the only reason I don't is because I can't have everything.
yeah. That's fair enough. But, I mean, yeah, to share some
You
thoughts
can't
on
hear it.
this.
That's another train going by.
Oh, nice. To share some thoughts on RBI, I mean, that's actually a good point here because last time we spoke about them, I think the narrative was slowly starting to shift, but not really. But now it has fully shifted. If you
Right,
look at their more recent earnings, now they're really doing like Tim Hortons is doing very well. Double digit same store sales we're talking about here, right?
right.
Burger King. There was earlier this year, I saw a lot of people, again, no offense to my American friends tweeting this, but I saw a lot of American people tweeting Burger King is so bad because there was like an article saying that they were closing a few of the old stores in America. But here is the thing that you have to understand with a global business like QSR. Burger King is not only in America.
Yeah.
60% of their sales are in the rest of the world. I remember same store
Sorry,
sales
what
up
was the percentage for the rest of the world?
60.
Yeah,
So
60%.
Burger
That's just
King,
Burger King. That's just Burger King?
yes, just Burger King. Yeah, yeah, yeah.
Okay,
So
okay.
Burger, yeah, Tim Hortons is mostly in Canada, but Burger King, right? So people who think, oh, because they closed a few stores in America, that's the end of Burger King. That's ridiculous, right? Same store sales, if I recall, were up 18% outside of America for Burger King.
Right.
So the business is doing phenomenally. And actually, by the way, even with the store closures, because that's people forgot that part, even with the store closures, they still grew their net count of stores. So Burger King is doing
So they opened
fantastic.
more than they closed,
Yes,
just
they
even
did.
just within the US.
Yes, exactly. So that's what I'm saying.
Okay,
I know
so
it's
they're
it was
basically they're
stupid.
just closing the dogs and opening up some winners.
Exact, literally. So, but anyway, since that, so firstly, Burger King outside of the US is doing fantastic. But other than that, they have announced historic investments in the US. They called it the Reclaim the Flame plan.
Yep.
And it's tens of millions of dollars, right, to really renovate some of the stores and again, also to refranchise some of them. So, for example, some of the operators that haven't been very good, now they're kind of bringing the hammer down and they're saying, okay, please sell your store to the better operators and they'll just take it from you and they'll run it because they can run it better than you, right? So this
So
is ongoing.
a franchisee that has, say, one or two or three other successful franchises, they're just saying
Exactly.
sell it to that person because they know what they're doing.
Exactly. And that, by the way, I should add, is it was the initiative of the Domino's guy. I forgot his name. Is it Patrick Boyle, I think? So
Possibly.
he was the Domino's CEO a long time ago, and he was appointed chair of RBI like maybe a year ago now, something like that. So he came in and he said, "Let's just do that because that worked extremely well for Domino's, and we think that will be a way to make things better in the US at least." So now RBI is actually really recovering and like I said, I mean, Tim Hortons in Canada too. There was a narrative, like you remember, right? A few years
Yeah.
ago, 2, 3 years, ago, people said Tim Hortons, it's the end and stuff. But now it's going great. Digital sales are up so much, and I will pitch you the app, Dave. It's really, really good because you get personalized offers, right? On your because like my app knows what kind of stuff I like, so every now and then I get an offer for like iced coffee for like $1 or something, or combine an iced coffee with a sandwich for $4 or $5, which is much better than if you go to the Tim Hortons and just buy it with your cash. It'll be way more expensive.
Yeah.
So the app is really good. I also remember when they rolled it out, it was so bad compared to now. So even they're really iterating and they're improving in real time, and the consumer is reacting positively to it. So yeah, Tim Hortons, Burger King, super good. Popeyes has had explosive growth before. Now it's slowing down a little. It's still growing, but I mean, if you grow 50% per year for 3 years, you're probably not going to do that every year, right? So that's
Right.
fine. And Firehouse Subs, though, had a really poor quarter this last quarter because they had some kind of technical issue, apparently, with their point of sale system. And
Oh.
so a lot of sales, like they stores had to close or something like that, which is
Oh.
really like shocking to me that
Yeah,
that
in this day
happened.
and age, like, you would
Yeah,
think sure, technical issues happen, but you should get an IT guy in there and have them solved in a
Exactly.
couple of days, right?
Yeah. So they've had this whole thing for, and they had an outage for like a few weeks or something. So that was a poor result. But other than that, at least they are expanding globally as well. So I mean, last time we spoke, I don't remember if they had already done that, but now Tim Hortons is open in Pakistan and India. Popeyes, they announced recently they're opening in South Korea. You know what I mean? Like all those
Yeah,
businesses are growing. Again, people who invest in this, we have to remember that it's not just Canadian or not just American. So if you don't like Tim Hortons in Canada, look at what Tim Hortons looks like in China, right?
right.
Or in India or wherever, right?
Where
That's
there's a billion people, that's a lot of customers
that
or
too.
potential
Yeah,
customers.
exactly. That too. So yeah. But yeah, as you can tell, I'm very bullish on that business for the long term. And my average cost basis is really good. Like I bought in the 60s or something, and now we're in the 90s. So yeah,
Nice.
I like it.
And correct me if I'm wrong, but just not so long ago during the summer, you were in the United Kingdom.
Yes, I went to London. Correct. Yeah.
Nice. And so, just talking about these global brands, obviously, I'm sure you would have seen a Burger King in
Yeah.
London.
Oh yeah.
But any of those others, or even let's expand it to anything you want to talk about in sort of the global brand space,
Yeah.
Starbucks, McDonald's, Coca-Cola,
Oh yeah. I mean, what?
anything, and
Yes.
I'm going to throw it wide open on that one.
Yeah, thank you. No, for sure. I mean, one thing I'll just mention from the UK, which I really appreciated, was Costa Coffee. Have you heard of them?
Never.
Okay, Costa Coffee is the UK's version of Tim Hortons. Actually, I'm lying. It's a bit more premium than Tim Hortons, but it may be a little less than Starbucks, and it's owned by Coca-Cola. Believe it or
Oh
not.
wow.
Yes, and there are lots of Costas in the UK. So yeah, it's over there, and I really enjoyed it. They had this like iced caramel macchiato, I think, or it was iced coffee with caramel shot, something like that. It was
Yeah.
really delicious. So Costa was really cool. I mean, obviously, Coca-Cola. I'm also a huge fan. They have such a huge array of brands. So we all know that.
And global
Um,
presence for well over
Global
100
presence.
years, and they're not
Yeah.
going anywhere for the next 100 years. So
Yeah, I mean, I remember looking at their annual report. I think it was 1998 or something like that. Could be maybe a little later, but they said that they had just about 1 billion servings per day. And now it's at 2 billion, Coca-Cola. So, I mean, it's still a growth business, even if it's a bit slow. But yeah, it's super
yeah,
dominant. It's everywhere. Coke's not going anywhere. Pepsi, I also really like. Pepsi though is more diversified, right? Because actually, majority of the sales are actually food products
yeah, the
rather than
snack
drink.
brands.
Yeah.
I'm just gonna
So,
back up there, like 2
oh,
billion Cokes per day. That's 25% of the global population.
well, so I'm not. I don't think it's Coke, but it's Coke products. So that could be
Still,
any
that's
of.
25% of
Yeah.
the global
Oh yeah,
population.
yeah. It's a lot. Yes, yes. Yeah, and I mean, and the Coke per capita as well, very much driven by actually Mexico and America. Those are like the two people who like per capita they drink the most. Here it's a bit less, and of course Europe it's a
Yeah,
lot
that's
less. So
Warren
there's room
Buffett
to grow.
drinking all of those Cokes every day. He's
Exactly. Yeah. Yeah.
single-handedly
Yeah.
driving up the share price.
Yeah, so there's room to grow, and then I guess actually one thing I could bring up, and this is less global, but Hershey's, right now I don't own Hershey's by the way, so not investment advice, but I have noted that the price has fallen quite a bit. For people who don't know, Hershey's is like it's the biggest American chocolate company. Now, for me as a European, what I think American and chocolate doesn't really go together because we have the premium
You
like Swiss
Europeans are
France,
so
Belgium.
snobby when it comes to
Yes, we
chocolate.
are. We are, but trust me though, it really is better, I think. Like
There's a reason why we're
yeah.
snobby when it comes to
Yeah.
chocolate.
No offense, but Hershey as a product, I mean, I like the studying that space very much. So whenever they put out a new product, I try it, and I look at their marketing and stuff like that. So I love Hershey's as a company, and it's very super dominant in the U.S. They also been deleting the share count like crazy. Like they keep buying back stocks and increasing dividends. I think they increased it 10 or 15% latest results. So yeah, Hershey, super high quality, even if it's not my favorite chocolate, but they're very good stock, I think. So
Yeah.
highly respect them. And it trades at like 20 something price to earnings. So it's a bit expensive, but you're paying for quality. So yeah, I like that one too.
Yeah, I know on X, the app formerly known as Twitter, Dave Greta is extremely bullish on
Oh yeah.
Hershey's.
Yes, I see his tweets a lot. Yep. He
I
likes it.
do have to ask you, do you know where Smith Falls, Ontario is located?
I think it's like 2 or 3 hours from Toronto, I think. Something like that. North?
Yeah, more east and a little
Oh,
bit
east.
north. It's
Okay.
I would say it's less than an hour southwest of Ottawa.
Okay, yes.
And
Mhm.
the reason I'm asking you this is because recently, so a long time ago, there was a Hershey's plant in Smith Falls, Ontario.
Oh.
And Hershey's sold that to what at the time I believe was called Tweed,
Oh,
and
Canopy Growth. Yep.
Tweed turned into Canopy Growth, and then now just less than 2 months ago, Canopy Growth has sold the exact same building back to Hershey's.
Really?
Yes.
Wow. Well, that marks again the decline still of Canopy Growth, right? What a sad story.
And that was their global headquarters because it was
Well,
like a
yeah, that's I
huge big
remember that.
plant
Yeah.
in Smith Falls, and Smith
Wow.
Falls is a town of 6, maybe 7,000 people in, like I said, the sort of the
Mhm.
Ottawa Valley area,
Yeah.
and maybe it's not even technically the Ottawa Valley, but yeah, 6, 7,000 people. It's a very nice little town. I've been there many, many times in my life, and, yeah, just kinda wild the way that it unfolded that, you know, however many years ago, Hershey sold that building to what was then Tweed. Tweed Canopy Growth turned it into their global headquarters, and now they've sold it back to Hershey's. And honestly, I don't know what Hershey's is going to do with it. Obviously,
Hmm.
it was retrofitted from a chocolate company into a cannabis manufacturing plant. So I don't know if is Hershey's going to retrofit it back. Are they
Yeah,
just going to
good
pull
question.
all the old equipment out of the storage lockers and make a chocolate factory again? I don't
Good
know.
question. Yeah, but I don't know, but that's interesting. Hmm. So they're going coming back to Canada, huh? Yeah.
Yeah, well, I don't know if obviously Hershey's never left as, like, on the shelf.
Right.
Hershey's
No.
has
Yeah.
always been
No.
on the
Coming
shelf,
back
but
with like their own plant or something, right?
yeah, well, they could
Yeah.
have other plants within Canada somewhere else that I don't know about, so,
Hmm.
again, I'm not speaking to that. Who knows? They could have something in w Canada's a big country, so anyways.
Right. Yeah.
Moving on from that, we've talked a lot about the winners, the companies that you love, the Brookfields, the railways, the fast foods, and I know there's so many more, but I do want to bring up Northwest Healthcare, and let's get into REITs. REITs have been hammered
Yeah.
because of the
Oh
high
yeah.
interest rates. I've taken a hit on quite a few of them. I've kept buying RioCan. Um, for some reason, the other day or 2 weeks ago, I bought like 3 more shares of Northwest Healthcare, even knowing full well honestly, I was expecting that dividend cut to come like 3, 4 months ago. So when the
Yes.
announcement came out a few days ago, I was not surprised about it. The only thing that surprised me was like, "Well, why didn't this happen 3 or 4 months
Sooner.
ago?"
Yeah.
Yeah, so I jump in there with your thoughts on both NWH and REITs in general.
Yeah, totally. I mean, Northwest Healthcare, it's a company that I used to own actually. I traded it in 2020 when we had that huge COVID drop. It fell down, I think, at the time to like $8 or something, and I bought a few and then I sold it like a couple months later at around 10 because I got a bit scared actually. I was like, I don't know. I like what they're trying to do. I mean, a REIT that owns like the real estate for like hospitals and clinics and stuff, that
Right.
sounds really sticky, right? Because those so like some people said, during COVID, hospitals will disappear and stuff. I don't buy any of that. That's not gonna happen, right?
Who
Like
said I never heard one person say
I heard
that.
I heard a lot of people say that as the bear case, because they were. But to me, it's like if you need a surgery, if I need to amputate my arm, do I do it at home or do I go? So you know what I mean? Like that doesn't make sense. So
You're
I mean,
probably gonna
yeah,
go to a hospital for surgery, not
yeah,
just like
exactly. So
call up my neighbor and be like, "Hey, can you give me a bypass? Like, I
yeah.
it's just a triple. It should be okay."
Exactly. So that was kind of a silly argument. But the fact is though, unfortunately, REITs as a general thing, right? Real like debt makes real estate go round. REITs are full
Yeah,
of debt, like all of them. It's
yeah,
just a matter of which one has more or less. Unfortunately, Northwest was one of the ones that had a lot. And in a high interest rate world, if it stays like that for too long, then you kind of get wrecked in that regard. So it's very sad, and I really feel for everyone and for yourself who got hit with that because dividend cuts are never fun. I had a few myself, so I know.
I've had
Um,
several this year because I have so many REITs. So, like
oh yeah,
True
so
North cut.
yes,
I
I
think
remember
I
that one.
INO cut. I think that was actually close to a year ago now. I've
Yeah,
had in the last year. I think I went through 4 dividend cuts. Well, one of those was AQN. We can
yep.
talk about them as well, but let's keep going
Yeah.
with REITs for a minute.
Yeah, no, so Northwest, but at the end of the day, they do this because that's what they have to do to still exist 10 years from now, right?
Right.
So it's just a matter of, having that happen and then deciding, do you still like the company? Do you want to average down or do you want to sell? For me, generally, if a dividend cut happens, I don't like to buy more, but I also don't like to sell immediately.
I don't like
I
to
think
sell at the loss because after the dividend cut, the share will, I don't wanna say it
exactly. It's
does,
gonna
but
collapse.
it
Yeah.
it does every time, right? Like,
Yeah, yeah, yeah. So, I mean, when I've had it for A&W, which wasn't a REIT, but I sold, and that was okay. But generally, like
similar to a
Algonquin,
REIT, like a royalty income fund, right?
yes. But for something like Algonquin Power, I still hold all my. I haven't averaged down, but I've held. So
I
yeah,
think I bought a couple more shares of AQN too, and
Oh
that
yeah.
I think that same day that I bought NWH, I was just like, "I'm gonna roll the dice today,
Oh,
baby."
yeah, no, I mean, there is some risk, right? In terms of how fast can they recover. But I mean, I certainly think most of those REITs that cut the dividend, they'll still exist, right? It's just it
Yeah,
might take a few years to come back. And so that's too bad for NWH. I hold 3 REITs currently. So Ryokan, as you know, we had the cut already, right? I bought it after the cut, so that
I
that was
bought after
okay.
the cut also,
Yeah,
so,
so
you
we're
and I
good.
got in at probably the sweet time.
A good time. Granite is really good. I don't expect any cuts on that one, but Smart
I love
Centers,
Granite, and it falls into that category of I can't have everything.
yeah,
I would if I could.
yeah.
Granite is another great one.
No, Granite is awesome. I've been growing that position this year, but Smart Centers, I am anticipating a dividend cut. I'm not sure of it, like I was maybe for NWH or a couple of others, but I think it's like 50-50. It's
Yeah,
very possible that they will cut it because a big portion of their debt actually is variable. And if you dive deep into their results, like I had someone ask me the other day, like, why do you think it's gonna cut? Because if you look at the payout ratio, it's actually not 100%. But latest results, the only reason that they weren't over 100% was because they had one-time sales of like condos that they're building. But they're not selling condos like all the time, right? The
right.
condos are built and then they're sold once, and then you still have to rely just on your rent that you bring in. And so I am a bit concerned right now that at some point it may just not work out. I don't think they would cut more than 50%, but maybe like 30%, like Ryokan. I certainly think that that's on the table,
Mhm.
and it's possible, perhaps moving into next year, if rates stay high like they are now. But
Yeah,
I still hold it and I still like it.
yeah. I like smart centers also. I don't hold it. That one is less to do with I can't have everything, but I feel that it's very so similar to Ryokan. Is
Yes.
like I'm heavily invested in Ryokan, and I don't, as much as I'd like to, or maybe it's a good idea or a bad idea, I don't know, to have smart centers as well. I'm like, they're so similar with their types of tenants and types of real estate that I'm so heavily invested into RioCan that maybe I should just stay away from Smart Center. And again, that's also kind of going back to I need to keep this portfolio to that 25. And
Yes.
I do know it's going to grow to 30, right? And I also know that I got to keep it under 30 just to be able to manage it. So that's kind of my reason for not having Smart Center. I do want to get into another one with you, and I know that you're a cheerleader on Quebecor,
Oh, yes.
Videotron.
Oh, I have news on that one if you want to. Yeah,
I want to go
absolutely.
through the whole telecom sector, Bell Canada, TELUS, Rogers, and obviously the merger or the acquisition, everything that happened there, the news you have.
Yes.
What you think? Do you think Bell and TELUS are their dividend payout ratios too high?
So I own Quebecor. It's my largest in the telco sector. I do also own TELUS and Bell. I had sold out completely of TELUS, and I came back recently, maybe a month ago or something, when it fell down to like $22 or
Yeah,
something.
it's been trading near 52-week
Yes.
lows for several, like,
Exactly.
2 to
So
3
I
months
came
now.
back. I think Bell is at more risk than TELUS in terms of dividend cuts, but I don't think they will cut it because I think they would rather just get more debt or something than to cut the dividend. With that said, I don't like the confidence that a lot of us in the community have on Bell. Like I see a lot of people saying Bell will never cut the dividend. And I'm like, I don't know, man. Like
Yeah,
there is a risk here, even if they pay dividends for 100 years or whatever, that, no one's invincible like completely.
right.
I mean, some are more invincible than others, but Bell, I don't think is, the epitome of financial strength that some
No,
people say it
honestly,
is.
I think it was last January, Bell raised their dividend, and I was
Mhm.
disappointed because I was like,
Yeah.
are you sure? Are you
Yes.
sure you wanna give me a raise?"
Yes. So, but here's what I see for the telco industry that is worrying for Bell and Telus and Rogers, right? Is if you firstly prices. This is the one thing maybe that in Canada everyone agrees, regardless of what politics you support or your opinion or anything, everyone agrees that prices are just too much, right?
Your cell phone bill is way too high.
It's ridiculous. And now the
We're
thing
the
is,
obviously, by far, the most, uh,
yeah,
the largest cell phone bills in the world. Like, I
it's
think South
crazy,
America is 2nd, and we're something like
way
40% more
above,
than theirs, or I
way
don't quote
above.
me on that number, but, like, we're way higher, right?
We are. So here's the thing is that in terms of the telco industry, the public agrees prices are too much. The politicians, by proxy of the public, because they, technically the politicians work for the public, they also agree. And the
On the
CRTC,
good days, they do
yeah,
anyway.
exactly. And the CRTC, which is the regulatory body for the telco industry, they
Yep.
also agree. One key point here: the CRTC chair right now, she comes from the Competition Bureau. Her job before was to bust these oligopolies and try to crush them to bring in more competition. In comes Québecor, which actually tries to provide better service, cheaper prices. When they came in, so actually maybe I should go back and speak on the history for those who don't know, right? So
Yeah, before you do, I'm just gonna say CRTC in Canada is Canadian Radio and I think it's Telecommunications Commission, so,
yes,
um,
exactly.
and so basically this watchdog that I didn't know that, but you just didn't inform me that now the leader of that watchdog was previously prior the leader of uh,
I don't know if she was the leader, but she comes from the Competition
the
Bureau.
Competition Bureau, yeah,
Yeah.
so she's from uh, that train of thought or that line of thinking,
Yes.
right?
I mean, it's like, listen, those telcos, this is the most uncompetitive thing in all of Canada. I don't understand how we can consider ourselves a capitalist economy and we say we love capitalism, and then we're okay with having Bell and Telus and Rogers that control like 90% of everything. That's ridiculous.
Right.
And who have these incredible prices that are so high, right? So, anyway, to quickly go
Every
back for
time I put out a tweet about how much is your cell phone bill, like crazy, crazy,
ridiculous.
crazy response. I'm sure you've seen them, right?
Yes. It's stupid.
Crazy responses.
It's stupid. So anyway, to give a very quick overview of what happened. So we had a fourth large carrier called Shaw, and Rogers basically made an agreement with Shaw to buy them. But the government and the CRTC and the Competition Bureau said, okay, you can only do that if Shaw agrees to sell Freedom Mobile to a fourth one, and that was Québecor, so that you could have actually a bit more competition because
And so
Québecor,
just to give a little more context to the viewer or listener here who might not be familiar.
yeah,
So Rogers was buying more
Shaw,
the like cable satellite
yes,
entertainment media division of Shaw. And then part of this deal was then Shaw had to sell the Freedom Mobile, which is the cellular division, to Quebecor. So
exactly.
I was just trying to give some context
Yes,
here.
yeah, yeah,
We're
no,
skipping over some
absolutely.
parts.
Yeah, no, thank you for that. So Québecor, for also our Anglophone listeners here who maybe don't pay attention, in Quebec, they grew 12 years to 24% market share, like in the cell phone stuff. Right? That's incredible. And now they're number one. So, and they did that with better service and cheaper rates. So now, so Videotron is the telecom entity of Québecor, right?
Right,
And they offer all these amazing services and they're so good. And so now combining them with Freedom to go actually and try to spread the Quebec model to the rest of Canada to actually bring some competition so that
right.
we can brief the consumers, right? Now, here is why I am more bullish on Québecor than I am on the others, even if I still hold the others, is Québecor, their entire ecosystem and structure is made, they already used to low prices, right? That's what they have, and they're already very profitable, and the payout ratio is very low. It's around 40% of cash flow. If you look at Bell and Telus, especially Bell, they pay out all of their cash almost
Yeah,
in
yeah.
dividends. So
Yeah,
they
it's too
need
much.
to maintain super high, average revenue per user. But the thing is, they can't because competition is coming for them. And like I said, the CRTC and the government and everyone agrees they've put out all these rulings that everyone needs to start lowering prices. And while it is true that they've been saying that for years and it hasn't happened, it is going to happen. So Bell and Telus are going to have to make some really hard choices. They're going to have to lower prices, and that's going to hurt their
Hurt their
ability to
bottom
keep
line,
that
right?
dividend. Exactly. Whereas Québécois can do price wars. They've been doing that for 12 years already. They don't care, and they're winning at it, right?
That's
So,
another train going by the way. You can't
oh,
hear
nice. So,
it.
so they can do it. And so, one thing also that really irks me a lot when I see like Bell and Telus, especially Bell. I remember that they were talking about it. Like when people ask them, well, why is it so expensive? And they say, well, it's because Canada is a very large physically country, and so
Yeah.
the investment necessary to have all this great 5G is like
Yeah, the
historic.
infrastructure is
Yeah,
it
but
is
the thing
expensive,
is,
obviously,
no, but
right?
the thing is, this is a lie because here's the thing. If you look at what's the numbers? Australia, their average cost per gigabyte, right, for your data plan is 7 times less than in Canada. And in France, it's 25 times less. And in Israel and Finland, it's like in the hundreds times less. Here's the thing about Australia. They're also a very large country. Their population density is actually lower than Canada. So Australia has more land per person than we do, actually. A lot of people don't know that.
No,
Why
I didn't
is
know
their
that.
cost per gig less than 7 times less than us? So this is a lie. It is possible for them to do better, but they choose not to. But now they're stuck because they're used to paying so much in dividends. So they're kind of stuck in this cycle. So now here's the thing though, is I do think that they are oversold still. I don't think Bell should trade at a nearly 8% dividend yield. I think that's kind of crazy, right? So I think it's slightly oversold. And if there is a chance that interest rates slowly stabilize or start to fall, then they'll probably be okay, at least to maintain the dividend. And if that happens, then at least, if we buy now, we get a really good yield on cost, which is so that's why I've been buying Bell and Telus. But overall, though, I don't like them very much. I don't know, but I don't like what they do to us people, right? And
Right. Yeah, no.
Rogers, I mean, no one really likes Rogers that much either in general. So I don't own Rogers.
I do
Um,
not own Rogers.
yeah, but yeah, I mean, I'm very bullish on Quebecois. I think it's definitely my favorite, and I think they have a lot of room. Another thing actually that I should mention that might be interesting for you and for the listeners is. And a lot of people don't know this, but the smaller carriers, they don't have their own network infrastructure, right? Or they have it a little bit, but only in certain parts of the country, but not everywhere. So what they do usually to be able to compete everywhere is they actually get to piggyback off of other people's networks, right?
Right.
So Quebecor is in a big battle right now with the big three, Bell, Telus, and Rogers, to secure that access for Freedom Mobile, but for rates that Quebecor wants, right? And so the big three, they've been doing delay tactics. They've been appealing the decisions constantly. But now we had the final ruling from the CRTC not too long ago, and they sided with Quebecor. And the ruling is public. You can Google it and read it. They literally say like they think Rogers' numbers that they provided are like kind of stupid and don't make sense. They literally said, I mean, they didn't say it like that, but that's kind of what they
Yeah,
said.
yeah, yeah.
So Quebecor won the ruling against Rogers, so that means they get to piggyback off of the Rogers network for preferential rates for Quebecor, and I'm expecting similar results from the CRTC for Quebecor relative to Bell and Telus as well. So this is what I'm saying about this is the behind the scenes stuff that most people don't pay attention to, but it's really important,
Right.
right? So the momentum is for Quebecor and Freedom Mobile, in my opinion.
Okay,
Also,
you
I should have
hear
mentioned it's much cheaper too. It trades at like 11 times price to earnings compared to like 20 or more for the others. So it's a steal in my opinion.
you heard it here first. Financial advice from Anthony. He's telling you
Not
to
financial
sell
advice.
all of your not financial advice, but no, great thoughts, great insight, and yeah, Quebecer is definitely a company more Canadians and whoever else who is investing in Canada should definitely be looking into
Absolutely.
for all the reasons Anthony just mentioned. Now, recently you had Willows on your podcast.
Yep.
That was a great episode.
Thank you.
And you asked Willows about the Canadian banks, and he said something that I absolutely love because I've tweeted this. Not exactly what he said, but I've tweeted sort of a similar context before. Of you can hate a company as a consumer, but you can love them as an investor. Was kind of been my tweets or captions in the past. And Willows said something very very similar. He's like, As a small business owner, I loathe the banks."
Yes.
These are his words,
I
right?
remember. Yes.
And then he said, "As an investor, I love the Canadian banks." So let's just talk about, I guess, that love-hate relationship and sort of overall opinions about all the Canadian banks or any Canadian bank in particular, and sort of what you see, again, going back to interest rates being high now. Obviously, the Canadian banks are very tied to mortgages.
Yep.
And so Dive into that one. Dive
Yeah,
into the deep
totally.
end.
Absolutely. So in terms of Canadian banks, globally, if we forget the macro situation for right now, I'm bullish in terms of, those are multi-generational institutions. They've done well for a very long time. They've been well managed as well, and
For
we've
longer
had.
than Canada's been a country, right? So
Exactly. And we've had pretty solid regulation as well. That's actually helped. A lot of pro capitalism people sometimes say that regulation is bad, but in our case, it's actually been a good thing relative to the American banks. So it's kind of the Wild West, and they seems like another American bank fails every week, right?
yeah,
We don't have that problem. So
we had
that's
so
good.
much less problems in 2008 and 2009 because the banks were better regulated, right?
Absolutely. With that said, I do have to acknowledge in terms of Canadian banks that there are differences in results. And I say this with, to my great sadness because my largest bank holding is Scotiabank, and it hasn't done as well
Yeah.
as some of the other big five, right?
Scotiabank,
Part of,
biggest
yeah,
also, if I'm pretty sure. Yeah, I
you
know it
too?
is.
Yeah. So the thing is, right? The reason why I own it is every bank kind of, they're all Canadian. They all have that Canadian quality, but then they all offer like a different type of flavor, right? So what I like about Scotiabank is actually half of their revenue comes from other countries outside of Canada. So that's actually my low risk way of diversifying into South America because
Yeah.
they have the Pacific Alliance. That's Mexico, Chile, Peru, and Colombia, and that's the majority of their South American operations. And those are growing populations. They'll grow their profits eventually, although it's taking longer than we want. There's a lot of political instability and issues in the region, but that's not going to be there forever, in my opinion, right? So that's kind of why Scotiabank's been underperforming. And even then, you see within the Pacific Alliance a lot of difference in the results. The returns on equity, like in the latest quarter, if I remember, Mexico was the standout, doing extremely well, better than Canada even. But then, which one was it? Colombia and Chile weren't doing that good, and Peru was kind of in the middle, if I recall. So you see, there kind. It's not like an ETF as well of banking, where you get banks in different countries, and they
Yeah.
all have their own different, performance.
Strengths and
And then
weaknesses.
exactly. So that's my largest holding. Then I own TD, and that one same thing, Canadian quality but different flavor. Here's the flavor is American exposure.
Yeah.
So TD, as we know, is actually a large bank in the U.S. In
Oh
the
yeah, TD
Northeast.
Ameritrade, like TD Boston Gardens. It's
Exactly.
TD has really done well at and most Americans know the name TD. They might not know that it
They
stands for
do.
Toronto Dominion, but they know that TD is a bank. They might not know
They
it's a Canadian
absolutely do.
bank, but they know. I think isn't it like the ninth largest bank in the U.S.?
Even more than that. Oh yes, actually, in the U.S., yes, something like that. It's a top 10 bank for sure. So yeah,
Yeah.
TD is my American holding. And same thing, very high quality, grows dividends every. I mean, Scotiabank as well, right? Like for that, they're fine. They've performed historically better than Scotiabank, I guess, because the American market's been more lucrative than the Canadian one. And then I own EQB, which is my Québécois of the banking industry.
Yeah.
Much better company, much better mandates to actually offer good products to consumers. I actually bank with EQB. I also own also have a Scotiabank account, but EQB much better than everyone else. They destroy them. You actually get a good interest rates just as a default anyway, right? For just in your when you put the money in your account.
Yep.
The ease of using like on the app, it's so good compared to all the others. So EQB has been incredible, and it has been the best performing bank as a stock in the last 10 years of all of North America on the markets.
Oh wow.
Yes, I think it's 400 or 500% return
Oh
in the
wow.
last
That's
10 years. Yes, better than JP Morgan, better than National Bank, Royal Bank, and all the others. So I like EQB. And for those listening who don't know, EQB is a kind of like almost a fintech. So it's very small, and they're more like innovative and digital. They're also going to be the first fully cloud operations bank in North America, or at least in Canada. I don't know about North America. So yeah, they've got that different kind of culture, and also the payout ratio is the lowest, dividend growth is the highest. They grew dividends 78% last year, which is just like what? I'm happy if I can get 10% from Scotiabank, which I know I won't. So yeah, there's a lot of difference in quality between the Canadian banks, but overall, I like them all. It's just different flavors, I guess. And then, to round out the others, I mean, there's Royal Bank, which is really good too, but I don't own it. Bank of Montreal, which is also awesome, and CIBC, which is kind of but it's all right.
I think that's a great synopsis of all the big five Canadian banks. Plus, you mentioned National in there, number six, and
Yeah,
yeah,
National's
again
great.
EQB. I again I see your posts, and actually, Dividend King TSX also is bullish on
Yes.
EQB, and I again another company. I'm like, it looks great, would love it. I can't own everything.
Yeah. With that said, I will say EQB. To me personally, it's also more risky. Like if you ask me, which is the first Canadian bank in the case of like a super terrible macro event, which is the first that would go out of business, I would imagine EQB rather than Royal Bank, for example.
Yeah, no,
Uh,
Royal Bank is the.
yeah,
I think like Royal
important.
Bank's the biggest company in Canada.
It is
Yeah,
important to note for Canadian listeners. Royal Bank and TD are the only two banks that are classified as systemically important in Canada, meaning that if there's like some crazy black swan event or whatever, those are the two important banks for the global financial system, not just
right.
Canada. So those
Yeah.
are the two that the government would want to protect first.
Yeah, that's amazing to think about it that way.
Yeah.
Here we have your link tree, the Newcomer Investor Podcast YouTube, Newcomer Investor Podcast Spotify, and Apple Podcasts. And so, yeah, let's just talk quickly about. And here's your, I think it came up there, your YouTube
Oh,
channel.
thank you.
So yeah, definitely. I'll have the link in the description below for the link tree in the YouTube channel. Be sure to check out Anthony's content at Newcomer Investor. And Anthony, anything you have to say about your podcast?
Yeah, I mean, you know what? I just started it kind of like for fun, and it's still fun. I really, really enjoy sharing, the journey, kind of my learnings, and just, any key information in the news, and then of course having wonderful guests such as yourself. So I expect to continue to do that, right? Like a mix of just my own journey and then great guests every now and then.
Yeah, no, I love it. You have great content over there. It's absolutely amazing. I see we're already over an hour here, but I do have to ask you one more thing because
Sure,
I've been bugging you about it on X, the app formerly known as Twitter, in late August and early September, and then you made a trip to Quebec, I believe.
I did.
And you know what I'm talking about is
Yes,
paddling because obviously
yes,
to that great Canadian experience. This country was basically built on the fur trade and paddling a canoe back in the 1600s. So,
it
uh,
was.
let me uh, let me get your thoughts on what it was like to paddle. You were in a kayak, I believe you said, for the
Yes.
first time.
Yes, first time. Dave, it was magical. Really very, very nice. So relaxing because the thing is, I wasn't like always like paddling, right? Like at some point I just kind of was in the middle of the lake and just, looking up, looking everywhere and just admiring the wilderness and the beauty of it all. And it was really, really nice. I
Yeah,
had
so
a
the
great
lake was
time.
calm.
Yes. Yeah,
The
it
lake was
wasn't
that's
like
perfect. The lake's
yeah,
calm. You can go stroke, 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 sit
exactly.
back, and your kayak is still like going forward, and you're just like looking around, going, "This is amazing."
Exactly. Yeah, no, it was really good. So
That's
I'll have
that's
to
Canada, man. That's the Canada I
yeah,
want you to experience more of because, Canada is not all just about, downtown Toronto or
absolutely.
Montreal or Vancouver. There's so much more to this great country, and, as you know from so many of my posts, I wanna get you out there and experience so much more of it.
For sure. No, but it's certainly my goal to, whenever I get a moment, like, on weekends or whatever, to try these types of activities. But that was really fantastic. And I'll certainly do it again too. And I think you had mentioned one to me on Twitter the other day. Was it ice fishing? No.
Yeah,
Was it
ice
that?
fishing.
Yeah. Okay, yes. So I'll have to try that.
Ice fishing. Find somebody with an ice hut where it's nice and warm. You want a nice warm ice hut. You don't wanna
Oh,
go out
okay.
there standing in the freezing cold
Oh
and
gosh, that's true.
with,
Yes.
the wind, man. The wind can be bad if you don't have a friend with an ice hut.
I can
And I
imagine.
also mentioned four-wheeling to you too, so I'm gonna take you four-wheeling sometime.
Oh, okay.
Come and
Sounds good.
visit.
Sounds good, Dave.
With that said, before we wrap up, do you have any, final thoughts or parting words? Anything at all?
Yeah, I mean, I'd say not investing advice, but I think, for everyone, just don't panic. You know what I mean? Like the markets right now, they're a bit shaky and there's always stuff happening. There's always like recessions, explosions, terrorisms, all kinds of very terrible things happening.
Yeah.
But we have to stay invested and
Well,
let
in
the
bull
compounding
markets and
happen.
bear markets too, right? Like, don't the opposite end of that spectrum is don't get too excited in a bull market. Yeah, sure, it's fun while it lasts,
Exactly.
but it's not gonna last forever.
Exactly. And let the compounding do its thing. If you own a company that you're sure is really good and isn't going away anytime soon, just keep buying. Like a stock like CN, right? CN Rail. I know right now things are tough, but in 5 years, 10 years, I'm sure it'll be worth much more than it is now, right? So just keep buying and don't worry about the news and all the stuff you see
Yeah.
out there. It's fine.
And that's where I'm a little bit with AQN Algonquin Power. I'm like, this company is still going to be around in 10, 15 years. So they've had a really rough year or two.
They
If I buy
have.
a few more shares now,
Yeah.
is 2033 Dave going to be mad at me for buying 5 more shares in 2023? Probably not, right?
Yeah. Exactly.
Awesome. With that said, Anthony, it's so fun talking to you. So much a pleasure. It's so easy for an hour to go by talking to you about this stuff. We both love it so much. I totally love having you back here on the Passive Income Podcast. I definitely will have you on again. And I think if you come on again, you will be the leader. I believe you are now tied with Justine with
Yes.
3 appearances on the Passive Income Podcast. So shout
Wonderful.
out to Justine as well. But thank you again for your time. It's been an absolute pleasure. If you're still here well over an hour later, please be sure to hit subscribe.
Thank you, Dave. It was fantastic.